Good day, traders. Stacey Burke from Stacey Burke Trading. Today, talking about the weekly market maker template for one great trade. Now, I've emphasized in previous videos the importance of setups, and it took me a long time to pull myself away from analyzing, trying to trade every move, all those sort of things. And I know I've emphasized one of my favorite setups is the pump and dump. But ideally, the best setups come after we get a weekly template set up with that trade scenario. I like to see trades set up where I have the opportunity to enter into the market with zero to little stress, where the market is about to collapse or explode. We get a typically each currency pair or any instrument for that matter will give one great trade on average. One great trade on average at least once a week. And I'm talking about trades that collapse or go vertical. Now, there are examples of this on the intraday, but we're specifically talking about the setups that occur over the week itself. Now, these to me are the 5-star A++ trading setups. And again, just to review, timing window, Asia 8 to 11, London 8 to 11 p.m., London 2 to 5 a.m., and New York 8 to 11 a.m. That's New York time. Now, there's going to be times when these markets begin the move outside of these timing windows. All that does is reinforce my bias. If I come into the session and that market is already in process of that trade, the bias of the direction that I'm going to trade into. So ideally, these will occur over a 3-day setup. It doesn't have to be a Monday, Tuesday, Wednesday. It can be a Tuesday, Wednesday, Thursday. It can be a Friday, Monday. A Friday, Monday, Tuesday. Again, it's about when the markets go vertical, and we'll review the pump and dump, but they go vertical, whether it's down or up, breach a level, most, favorably the high of the week or low of the week, collect volume, breakdown, retest, and then collapse for a vertical move. Now, just to review, the pump and dump is a classic textbook pattern, but this template will show up over and over again for shorts and the reverse for longs in the market. And often this phase one, day one, day two may not be, although there may be movement, it may not be ideal for trading. But day two, level 2, we can get very strong trend moves. And again, the yen crosses right now are great examples of this, with very strong trending day 2 moves. Opportunities for zero stress trend trades. And then we have markets that are just trading either already in a downward direction or they're in a consolidated trading range, but we get a 3-day setup for a pump and dump scenario. And often this can coincide with the news calendar, where they will use the calendar to the vertical move that will bring traders higher up or down, collecting volume for a day or two, and then a reversal in the opposite direction. I'll just run through each pair briefly to point out the template. And you can go back and study your charts, but you're not going to get the same setups every single week on every single pair. My emphasis is on identifying the best ones that fit my criteria for that pump and dump scenario. And that could be for a vertical move. So again, day one, we're looking at the euro here. Day one is Monday. My trigger for anything is a daily high or low broken. But ideally, the first thing I always do coming back to process is marking off my high or low of the week. We can go back and look at a couple weeks. I want to see a 3-day setup. Now, some traders may want to trade those setups, and sometimes what I want to emphasize is the difference in the price action in a market that goes vertical versus trading swings inside, trading these back and forth moves. So there are trades that are at the end of the session, end of the day, 3 Asia, London, New York, all those sorts of scenarios, which I would consider scalps. And then we get the high of the week, low of the week opportunities, which ideally I consider those to be scalable trade setups. So we have Again, day 1, day 2, day 3. So the day 1's put a high in. They've gone lower on day 2, and day 3 puts a low of the week in. We get a squeeze in our timing window right at the U.S. Open for a vertical move. Now, again, you're not necessarily going to be at the screen for all 3 sessions or all these opportunities. The point I'm making is if you can build your playbook, these explosive moves are the ones that I look for because they're very little stress and they're reproducible week in and week out. So this particular week, so we had news sometimes that will bring markets up high, or we'll get a squeeze at the low of the week, and we can get a reversal that can come back just as fast. And again, market breaks down just prior to the U.S. session. Well, then I'm going to be looking for a re-entry into that market in line with the direction of the break. Coming back to this week, if we look at the euro, we have day 1, day 2, day 3 inside reversal. So a classic reversal flipping the book, the rounded bottom on day 3, and then the vertical move on Thursday. This vertical move, if we go back and just mark off, we got a peak formation that the market took out into the high of the previous week. This is a 15-minute chart, by the way. But we get 3 pushes, 1 push, 2 push, 3 pushes. So if I did nothing else this week but go to the euro when it took out the high of the week on a vertical move, this market offered me a trade not only at the high of the week. If I wasn't available at that time for this trade, I got a re-entry in the New York session in line with that original trade setup. You'll notice the 3 pushes back into the New York Open, and then the continuation in line with that original move. This market also gave a second-day trade. I'm not saying this was the best one, but for the euro, there's our textbook high of the week, sell high opportunity with zero stress. Some traders may have traded the trend trade out of the inside. And again, you can see that sometimes when you're wanting to get in this move, you're forced with buying at the high of the day, which may scare certain traders out unless they knew that this was a continuation back to the high of the week. But the easy trade was up top, 3 pushes, the short trade, and then the continuation move in the U.S. session. The pound gave an absolutely textbook, probably the best trade setup of the week. We are inside of the previous week's high and low. Monday, Tuesday, put the high and low of the week in, pulls back inside on Wednesday, and then the market proceeds to work back up into Wednesday's high. We're at the high of the week. We get 3 pushes, 3 levels at the high of the week. Again, I'm looking at the outside, not the inside. I don't want to trade this stuff. I'm waiting for a market to go vertical. So again, we have an example of a market that locked in the high in the gap time, came down and broke structure, took out the low of the day. U.S. session opens at the low of the day for a stop hunt back up into the market's short trade. Now, this was also the high of Wednesday, which was our previous high of the week. So you can see now 3 pushes into the high of the week. 1 push, 2 pushes, break in structure, 3 push retest. The breakdown and consolidation for a second day trade vertical move. So traders may have shorted this and they said, oh, Stacey said this would go vertical, it should go vertical. That's the first trade off the high of the week that breaks structure. We have our pump and dump anchor point. So again, where the move, going back to that chart we looked at, the accumulation, markup, and then the distribution phase and the collapse. This is a zero stress, scalable, reproducible trade. This will show up again and again and again. Put this in your playbook. Japanese yen, strongly trending market. We have a day 1 rectangle. Friday was a breakout of Thursday's high. So if we, Friday was a breakout of Thursday's high, which also was the high of the week from Wednesday. breakout pullback, consolidation, and then the trend trade out of the geometrical. This is what I call the day zero, the consolidation for the trend trade. This market was a strong trending, it's already a strong trending daily market, but day two trending day. Day three put in a triple top. Now, I'm not hugely in favor of shorting a strongly trending market, but on day three they gave us a break in structure from the Asian session, and then the short trade retest of the low at the Europe window. So the market, day three, puts in a triple top, breaks structure, catches all the higher level longs, puts in a low of the day, three pushes up. There's our pump and dump in the Europe-London session. Accumulation markup, pump, 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 the collapse for an easy, no stress, 25 plus pip trade back down. Canadian dollar, we had a vertical move on Thursday that put a high in place. So again, an example of market going vertical. And the reason why I want to see that go vertical is I want to see if it fails up there and if we get volume caught up high. So we get our Friday consolidation staying up high. Monday trades up into the high of Thursday and gives us a little M top break in structure on Tuesday. Puts in a low of the week and then trades back up into Monday's high. We get our half Batman. Actually, we'll just point this out. Again, you'll notice the anchor point, that whole pump and dump, which turns out to be a larger triple top type pattern. On Wednesday, we get the breakdown of that market in Asia. So again, if you're not at the screen, we see this template playing out. We want to be trading in line with that existing collapse in the Europe session. Market gives us a 3-bar pullback in the U.S. Open for a continuation move down. Again, the 1, 2, 3, and the collapse and continuation back through the low of the week. Just pointing out again, though, the zero stress type of trade. The market then proceeds to put in a low, and on Thursday trades into that low, creeping trend into the low. Think squeeze. This market coils and reverses in the U.S. session. Again, we have volume trapped down low, little rectangle down low for a explosive move back. Now again, not saying you would have traded every move. We have a market that collapsed down. We have a market that's gone vertical up. On Friday, we have an opportunity to participate in a second day trade opportunity. Again, trading in line with the original break. Our objective will be the high of the week. Low of the week, high of the week opportunity. Gold gave a great peak formation, 3 levels of rise on Monday. So we had day 1 on the previous Monday. Day 1 went vertical. Day 2 continued to go vertical. No reversal. Day 3 consolidated and choppy. No reversal. Sorry, Monday, Tuesday, Wednesday. And then Thursday gave us a trading range market, which was a creeping trend for a squeeze going vertical on Monday. So on the third level of rise, we have a market that now has gone up through the high of the week, going vertical. We have 1 push, 2 pushes, 3 pushes to the high at the U.S. session. This market breaks down inside. So again, traders are not trying to sell the top or buy the bottom. We have our anchor point for the pump and dump where that began. But the safe trade is on the inside, U.S. Open, for the collapse back down. Now, if traders had locked this in and they come to the screen the following day, we have not triggered a previous day's high or low, but we have a high of the day at the U.S. Open, pin hammer. We have a high and low of the day, Asia London, pin hammer at the high in line with our broken down market for a vertical second day trade opportunity. Zero stress, collapse through the floor. Oil gave a great trade as well. Friday goes vertical. Monday retests and breaks the high of the week. Puts in a peak formation, and then we get 1 push, 2 push, 3 pushes in Asia on Tuesday. The breakdown. So again, if you're not in Asia and you come to the screen for Europe, you want to be trading in line with this move down. This market then hit the previous day's low and gave 3 pushes into the U.S. Open, the U.S. session 12-candle window, for a collapse back down through the low of our anchor point where that move began. So again, emphasizing not worried about trading the back and forth if you're in at the high or you're re-entering that move in Europe. Once it hits the previous day's low, be aware that they could come back into that trade, but then the re-entry for the short trade at the U.S. session window for the complete collapse, zero stress, no heat trade. Just looking at the rest of the week, you can see again the difference in a market that's choppy. We could say we got day 1, day 2, day 3. Maybe this market is going to collapse next week back through the low again. I don't know. I have no idea. But when a market goes vertical, this is a lot easier and cleaner for me to see and trade, and the opportunity for risk reward is greater. Nasdaq, same scenario. We had the low and high of the previous week drawn in there. Monday trades below the low of the week, pulls back inside. Tuesday gives an explosive vertical move out of the low of the day. We have our high day 1, day 2, day 3 up high in the U.S. session for a short trade back down. High of the week, day 3. So again, there was a low of the day opportunity after they had locked in the low at the U.S. Open for a vertical move. U.S. Open for Nasdaq is my main window. There are intraday scalps, but I'm talking about these explosive moves that will go quite a distance. The market then proceeds to go down in 3 pushes, and then on Thursday they trade back up into this pattern, which was a 3-push pattern on a 1-minute chart. They go vertical at the New York Open. We'll take a look at that. Smaller time frame on the 1-minute chart. Very obvious pump and dump. But the entry opportunity of 3 pushes, then the reversal. We're at the high of the week. Traders may have just scalped this back down, but held on to a second position, knowing that this trade may have potential to continue to fall not only through the low of the day, but perhaps back down towards the low of the week. So hopefully you got value from today's video, traders. I'm pointing out where the larger opportunities are for less stress, not trying to trade all this chop inside, letting the market set up. One trade like this outweighs a lot of smaller scalps and everything else throughout the week. And this is a reproducible opportunity. So study your templates, high and low of the week. We can get day 1 trades. We can get day 2 trades. We can get day 3, day 4, day 5 trades. There are opportunities every day. It's just a matter of being patient and letting these markets set up and being diligent enough to follow them and know exactly what you're looking for. Have a great weekend, and may the markets go with you.